and thanks for joining us at EMII.com. I'm Caitlin Sisney with your Banks and Brokerages Report. Today is Tuesday, March 11th, 2008. Lehman Brothers is laying off about 1,400 people because of difficult market conditions. That's about 5% of its workforce. According to a Reuters report, the cuts are being made across all divisions and regions, and employees affected were being notified on Monday. Prior to Monday, Lehman had eliminated close to 4,000 jobs in the last year. Many were in its mortgage operations, which have been hurt by the nation's housing slump, Reuters said. The bank declined to comment. Staying with banks and brokerages news, Goldman Sachs promoted Tim Ingrassia to fill a new position as head of its mergers and acquisitions practice in the Americas. According to an internal memorandum obtained by the New York Times, Dealbook, in this newly created position, Ingrassia will supervise the firm's practice across all industry groups. The memo by investment banking co-heads David Solomon and John S. Weinberg noted that Ingrassia joined Goldman in 1986 and was made partner in 1998. He will be succeeded as the head of the Consumer Retail Group in the Americas by Kathy Elliser, who joined Goldman in 1993 and who made partner in 2004. And in other banks and brokerages news, Goldman Sachs disclosed that its two co-presidents received total compensation of $67.5 million each during fiscal 2007. According to the Wall Street Journal, Gary Cohn and John Winkelried got salaries of $600,000 in the fiscal year ending November 30th. According to Goldman's annual proxy statement with the U.S. Securities and Exchange Commission, each executive also received a $66.9 billion bonus. In securities filings late last year, Goldman said each executive had received restricted stock amounting to $23.6 million, plus options packages valued at $16.2 million. Goldman Chairman and Chief Executive Lloyd Bankfein's 2007 compensation amounted to $68.5 million. And in banks and brokerages news in Asia, London-based HSBC Holdings has applied for regulatory approval in China to raise its stake in the Bank of Communications to 40%. According to Bloomberg News, HSBC, Europe's largest bank by market value, and the Bank of Communications are seeking a waiver from a rule barring a foreign investor from owning more than 20% of a Chinese financial company, BOCOM Chairman Zhang Chaoliang said in Beijing. Zhang said he'll meet with HSBC's chairman Stephen Green next week. HSBC owns 90% of BOCOM, known as the Bank of Communications. Increasing its stake in the Shanghai-based BOCOM to 40% would cost HSBC about $13.8 billion. Based on Monday's closing price, Bloomberg reported. Peter Wong, HSBC's executive director for Hong Kong and China, denied that an application has been made. And that rounds out today's Banks and Brokerages Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our Banks and Brokerages channel online and read the latest developments.